I want everybody who even looks like a loan officer to come up and join me up here. So, Vanessa, you're coming up first and sit next to me, would you? So please welcome Vanessa. Do we have a slide? Look, here's Vanessa right here. Welcome her. Come on up. So, yeah, come on up, guys. So ICOR, Patriot Pacific, we've got a lot of questions. Christian, welcome, Christian, over here. Good to see you, brother. Tony, coming up. Maybe everybody's with Vanessa, come over here, perhaps. Hey, Eric, how are you, my brother? Great to see you. All right. Now, the purpose of this session is this, to everybody who's online with us, everybody in the room. We are focusing in the month of October on two themes, one of which is how to create affordability, and the second is how to create generational wealth. So Doug, so Richard, so Aja, so Angelica, when you meet buyers, they're going to be in one of two categories, or maybe both. One is, how the heck can I afford a home? So we're going to go through this with bullets together from all of this wisdom. You've got all this collective wisdom, not to make speeches. They all know they're not going to make long speeches. They're going to share with us, how do we get people into homes? And secondly, how do we create generational wealth? And these are the clients that we're meeting every day. There's one person who's going to make, oh, by the way, my battery is low here. Can somebody grab my charger from the office? One exception on a speech is Vanessa, because we're privileged to have you here. We on? Yes. And do we have microphone for her? Super. So Vanessa, first of all, welcome. Everybody can see your introduction here. Share with everybody, and I want you to brag just for a minute, who you are and what you've done and what your mission is.
Thank you so much for the opportunity. I felt great coming in and listening to you, Andrew. Not the first time I was here. And I really felt inspired with your affirmations. But this is an affirmation for myself. I live, breathe real estate and lending. I've been in this wonderful industry for 30 years, and it is a privilege to build generational wealth the right way, help people into homes. So when you said the dirt, we want to feel that dirt, I'm like, yes, we're here. Yes. Want to feel the dirt. So I've been in residential lending for 30 years, and I started as an originator. And I found my niche really helping first-time home buyers, move-up buyers, and looking at money out there with the cities, municipalities, and most of my training came from Countrywide Home Loans way back in the days. I won't say what year, but what was wonderful is when I started originating and working with families, I realized there was free money out there for some select families if they fit the mold, right? And that led me to look at building generational wealth with tools out there that not everyone will do. It's a little bit more work when you're working with a first-time home buyer who thinks they can't do it or they need 20% down, which is not true. And so from that, I really did well as an originator and then got into management. But I always looked at the end, what loan would I give my mother? What loan can we create home ownership? And living in beautiful California, we have a sunshine tax nobody talks about. You want to live in California, guess what? The average loan amount and sale price is pretty high. You are all walking millionaires when you own real estate because it's just the gift that gives on gift here in California. We have appreciation. We really don't have a depreciation when it comes to real estate if you've been doing it for a long time. So I have the privilege of being the head of community lending at City National Bank. I've been there 3 years, and this is the newest division from the bank. But with that came a cost that I had to build a really great program. And so I was the architect behind Ladder Up program, which we'll talk about in a little bit. It is one small solution on how to build generational wealth for that first-time home buyer for a refinance in a good way. And I had to think a little bit outside the box, and I'll talk to that in a little bit about the great thing about the program. But really, it starts with what is the best program out there that we can really help drive that needle, that we work with wonderful partners like yourself, because you guys are the first line of defense. The families come to you first. The buyers come to you first. And what we want to be is a partner, one of your partners, because there's wonderful other organizations and banks out there and independent mortgage bankers. But I just have one solution, and it's been working really damn well. We had one of our highest funding months last month, and we originate on average about 160 units a month, and we help build that.
Yeah, you guys understand, right, that this is City National is actually well known amongst movie stars and famous
Yes.
people, and that's been their niche. But they've built out this special program, self-funded now, not government funded. 160 people who received a down payment. And that's why the bank and Vanessa have been acknowledged in journals nationwide. And we're very lucky to have her here. And I want you to understand this is about Vanessa, but it's also about the customers that you're going to meet through Zillow and through our social media leads. We've had over 1,250 buyers contact us in the last 30 days. And many of those buyers need this kind of program. So I just wanted to, again, endorse Vanessa. I'd love you to share, if you would, and then we're going to have all these guys share bits of knowledge here. I still don't see this plugged into a charger. Okay. Thank you so much. Tell us about Ladder Up and how it works so that all the agents online here from Los Angeles to Chula Vista know what to do.
So behind, you'll see a blueprint of what the program is like. And this works for a purchase or for a refinance. And for the refinance, what's worked really well is for those clients that had a higher interest rate with mortgage insurance. Because by the way, this program has no mortgage insurance, which gives a lot more purchasing power to those families and individuals that want to buy. It's a 30-year fixed. It is not an adjustable. We want 30-year fixed for stability. So I'm always looking at what is that best program for the families out there that we're serving. And by the way, I do want to take a moment to introduce my amazing, talented team who is with me here today. They're local. Most of them have an average of 20 years of experience here in residential lending. We have Serena.
Hi, Serena. Welcome.
We have Ulises, both top producers. How many loans did you originate last month, Ulises? 13 originations, and he funded about 9 units. Serena also originated a large number, but these are top originators that really know programs, really know how to look outside and think outside the box. So back we go, and we have Adrian, the incredible manager.
Hey, Adrian. Welcome.
Adrian Oliver also. So the team has an average of 20 years of experience. We speak, I don't know, about 10 different languages on the team. So we help all borrowers. So there's 3% minimum requirement. When it is a single family residence, that 3% can be a gift. If we have 2 to 4 units, then we do require a 5% down payment. Now, the 3% gift, it does happen a lot. Also, we have primary residence. The property is a special purpose program credit. So the property has to be in a majority minority census tract. And towards the end, I have some maps out here so you could see, okay, what does that mean to me and the properties that I have? It is a really great tool because along the lines, we also have a $20,000 grant. This is a true grant. It is a gift. You don't have to pay it back. It's not a lien on the property, and that $20,000 can be used for down payment, can be used to permanently buy down the rate or a closing cost, which is great. We're one of the highest down payment programs out there, grants in the market. The program is in 6 counties in Southern California. So think of San Diego, Riverside, San Bernardino, LA, Orange County, and Ventura. So you want to go all the way from Ventura to the border. So we encompass a large amount here in Southern California. We also have the program in New York and New Jersey. Now, why the hell those areas? Because that's our biggest footprint with the bank. Again, we are the bank of the stars. So think of celebrities, think 90% of all celebrity singers, they bank with us. That's crazy. I know. We're like, what? Yes. So, but we focus on everyday people, right? Us, the community. So along those lines, we have the 6 counties that we serve. The FICO is 660. We want sustainability. We also are looking for a 45 back-end ratio. Why? Because we want people to live and not live for the house. So we are a 45 back-end ratio. What else do we have? Non-occupying co-borrowers. This is interesting. So this is like when I was building this, I'm like a chef in the kitchen, I say. I'm like, wait, can we do non-occupant co-borrowers like an FHA? where the parents can help qualify? And the answer is yes. So sometimes we have that college student or just graduated and mom and dad are helping with the down payment and qualify because they may not be right there at the income. Well, we can do it with this program. It is a portfolio program, so this is with City National. We are not selling and outsourcing, and we service our loans. So that also helps ease with some of the buyers out there and the families that we're helping. And again, the grant can be used in multiple ways.
So can the grant be used for the down payment?
Absolutely.
All right. So now let's just bring it home to everybody online and all over California watching this right now. So we're going to go over to FHA and all those programs in just a minute. I know everybody knows that, but I want to just respect this program. You've got an opportunity here. We don't know how long it's going to last. I think it will last a long time because of the commitment to the bank. This is not funded by the government like CalHAFA when CalHAFA runs out of money. And how many of you have had people who just couldn't get the down payment? I read it on Follow Up Boss, right? Just don't have the down payment. That problem is now eradicated, all right? And understand the basic criteria, 665 code, 45% DTI. The 3% down is paid in your $20,000 grant. And do they have to pay the grant back?
They do not. If they sell it a month later, 6 months later, that's fine.
Okay, did everybody hear that? I've done this nearly 40 years. There's only one program that was like this. Do you guys remember Nehemiah? You do. You younger guys don't remember. So Nehemiah was out of Sacramento. You remember Nehemiah? And they were friends of mine. I was going up to Sacramento twice a week for like 3 years. And Nehemiah had an extraordinary program like this. A lot of it was government funded, and a lot of it was self-funded by back-end monies that they put back in, which we don't need to go into. But Nehemiah was extraordinary. This is something extraordinary, and that's why we're talking about it. So when your buyers are stuck, everybody online here, when your buyers are stuck, and I'm going in spearheading, and the ISAs are going in spearheading, and they're looking at your leads, and it says they have no down payment, put them on a property alert. That's not good enough. You have now got a solution, right? So we've got a lot to talk about, so I need to wrap this portion up. What else is it? I see at the bottom 5% down on 2 to 4 unit properties.
Correct.
Talk about that.
So you could put 5% down when it's multiple units. So 5% have to come from the borrower's own funds. That's the only requirement that we do.
Can the grant contribute to that? No.
No, 5% when
So
it's
if
units.
It's units, it's 5% down, and then you use the rental income for them to qualify.
Correct.
And if they're a first-time investor, how much of the rental income will you allow?
75% of that value.
Does everybody understand that? So let's bring that home. Kathy, I didn't see the mic. Let me just go to you in just a second. If you see showing somebody a home, how many of you have this scenario, and they only qualify for 450? And it's Pico Rivera. You're not going to buy anything at 450, are you? What do you need to be, 7.5 maybe, right? But maybe, but you get the idea, right? But this possibility of a duplex or a duplex in a nearby town, so, or 2 to 4 units, now they can use 70% of that income. So if you can negotiate a good deal on the property, this person now not only fulfills their dream of being a first-time homeowner, they're also a landlord at the same time, right? Now, frankly, every single person in this room should do a social media post to exactly that effect. You want to be a landlord, you've only got 5% down, I can show you how, right? That in itself is a social media post that should blow up all over California, because now that buyer who only qualifies for, I'm just doing rough math, say 350, and there's another 500 left, but there's 2 units, that rent, 75% of that rent is easily going to handle the debt service of what's left. Does everybody understand what I'm saying, right? Kathy, you had a question.
How quickly can these close?
We're closing an average of 30 to 25 days, depending on the borrowers, how clean they are with getting all our documents on time. But another thing, we were working with our realtors in the private remarks. We say this property qualifies for a $20,000 grant. Connect with us, and it gets sold faster. When we're there on the first weekend of an open house, it also gets us faster into escrows because we have a lot more traffic flows, because we're like, wait, what? This property has $20,000 tied to it? So that's good foot traffic, good buyers, and leads come out of it.
So this is also very important. We're seeing the market turn around now. Basically in California, most markets, inventory is up between 17 and 21%. That's going to go higher. Trust me, I've lived a while. It's going to go higher. You're going to see inventory increasing probably 40%, not just 15 or 18%. And there's going to be a lot of impact. And that means that listings don't sell so fast, and suddenly being a listing agent isn't so idyllic because you've got 10 properties that aren't selling. So to use this tool, you can say in private remarks, this property qualifies for a $20,000 down payment. If your client doesn't have a down payment, ask me, whatever, something like that in the private remarks. You're now going to have more traffic in your open house. Yes.
Now, do they always get 20,000, or are there cases where you tell them they can only have 10 or a different amount?
Great question.
What we do is we do a waterfall effect. So if they do 20,000 and it's 3% of the sale price and we have 15,000 left, 5,000 left over, then we'll apply it to closing costs or also to buy down the rate. So we can
It's 20,000.
Correct.
Regardless. Okay.
All right. So it's going to be that combination. Sometimes somebody's going to lend them some money to help them and so on. But it's $20,000. And what's stunning about this, most of these grant programs, Golden State, Cal I could go through a whole list of them through the years I've done this. Most of them are some sort of payback, or the payment does count to their debt service, or if they sell it within 2 years or 3 years, have to pay it back. There's 101 rules. But the fact you can actually use this money and do a refinance out 6 months later it's an extraordinary program. Did you want to show the map?
Yes, one more thing along those lines. We do have about 30 down payment assistant programs that are approved. So if we're working with a client, one of your clients, and we realize they might qualify for more down payment with Cal Home of another 100,000, we'll let you know, because we want to make sure that the client is fully qualified, takes full advantage of other programs that they may qualify for. So we'll let you know, because all our community lending loan officers know this. We live and breathe down payment and helping our clients qualify for more home.
Maybe I'm sorry because of time. Can we
Okay.
go to the map?
So wait, 1 second, go back. I'm sorry, Andrew. This is really important.
Yeah.
Our income limit is the highest in the history of lending. It's 300% AMI. What on earth does that mean? Let me talk to you about the numbers. So if you're buying here in Riverside County, beautiful Riverside, the income level is 311,700. That's a lot of purchasing power. 311,700. That's huge. So you're looking at high sale prices. So they're like, oh, first-time home buyers? Yeah, could be a move-up buyer. We're doing, like right now, we're closing an attorney who's making 300,000 and they qualify. So this is huge. This is why I brought this up. Los Angeles, well, the income limit is even higher. We also have higher income limits in Orange County.
San Diego's 392.
Yeah, 392,400 in San Diego.
Just think of all the people with kids, and the kids want to buy a house. They can't buy a house because they don't have a down payment. And they can use this grant. Fabulous. Let's see the map.
Okay, so here's the map of where we are for all of our areas in Southern California. So I put all the way from Chula Vista all the way to Oxnard. So anything in the orange qualifies majority minority census tract. So think of the areas that you're living in. You're not going to have too many like the Del Mars, La Jolla's, right?
Yeah.
Hollywood Hills,
These
Malibu.
areas all here through Oceanside, Escondido. Look, all through Temecula, Menifee, River, all over here. Out to La Quinta, Indio.
Let's go to the next map,
Crazy.
Cameron.
Yeah.
Okay, so here's where we are at Crystal Ridge, this area. So all around qualifies. That's a lot of territory. Granted, we have some hills up in here, but even part of, right, where are we? Duluth qualifies. We're like, what the hell? Yes, it qualifies. Okay, let's go to the next. No, we need a home.
Good.
If it is manufactured, it has to be, yeah, it has to have permanent foundation and have MH Advantage certificate. So we do those case by case. Condos.
Those are okay.
Yep.
Good.
Condos, co-ops. We do co-ops in New York. Okay, so here is a bigger area of Temecula. So we have Pollock qualifying, Fallbrook. We have definitely like Elsinore, Winchester, Marietta, Wildemar, Hemet, San Jacinto. All this area qualifies. So just looking into the weeds here in our backyard, I wanted to show this map.
So for most of the agents here online are all over Southern California. So you're talking Pico Rivera, Norwalk,
Yes.
Whittier, Stanton, Westminster, Long Beach.
Yes.
Geez, I mean,
Yeah, all of Whittier, all of Pico Rivera, to your point, qualifies. We just did an event on Saturday and the entire city qualifies. So yes, we're closing these all day long. Our realtors, our clients love us, and it's all word of mouth.
All right. So we've got a lot to cover here, and the purpose is that we all understand how we can sell more homes. I want our team, as our footprint grows, even as it grows into Orange County, as it grows into San Diego, as 11 people joined us last week just in San Diego, we have a foundation of being an opportunity-driven organization, a community-driven organization. And we need to know exactly how to help people achieve their dream of American home ownership. And the second part of the discussion today is going to be about how they create wealth. So would you stay with us and not go away for a minute while this conversation continues? I want to hear a round of applause for Vanessa, what she's doing, yep, and her whole team. So thank you, my dear. Let's open it up. Guys, you're going to need to be adults here and grab the microphones when you go to piece to say. And I'll tell you exactly what we're going to do. It's at 10:18. We allowed this till 10:45. So we've got 30 minutes to have a granular conversation, right? And the granular conversation is about two subjects. You got to lead. It comes through. It's from social media. It's from Spotify. It's from our offshore group. One of the multiple groups we have, 1,200 of them a month. I would say at least half of them are wondering, how do I afford a home? They're nervous about interest rates. So let's talk about the affordability piece. Guys, girls, how do we get people into homes? What's the best tools we have, and how do those tools work? And just give us little nuggets about the tools. You don't have to give like a long speech about the entire underwriting criteria. How do we get people into homes? What's the best choice? Let's go. Anybody, let's go. Go ahead.
How about this? I'll start. Is it
Yeah,
on?
they can hear
There you go. So,
This is Alfonso,
follow-
Geico Lending.
lending branch manager over in County branch. And, 3 myths. First, I have a 600. I can't get down payment assistance, as we saw, right? 660, 640. That's a myth. We could do it.
So is that an FHA product?
It is an FHA.
By the way,
product.
this is what I do. I'm very rude. I interrupt. So,
They should ask.
right. So FHA,
Yes.
and you can go below 600
We could go below 600.
without changing.
Percent down payment assistance.
So without changing the down payment.
Changing the down payment, 3.5.
All right. So again, that's something you need to hear. I hate to say this, but how low does that go?
Actually, 580.
580.
Case.
All right. So
600 and above.
So watch this. So today, Fabiola is going to talk to us. I think, are you going to talk, or Fabiola? Fabiola is going to talk to us about how to move somebody's credit 40 points in 30 days. So you're going to learn today how to, anybody interested in selling more homes? Can I see a show of hands? That's what this is for. How do I convert? Now we're selling a lot of homes at 800, 900 million, million two. It's fantastic. Let's just focus on this today. So bottom line, we can go below 600. FHA is the product, 3.5% down. So this is, yeah. So a lot of people don't know that. And any of you can chip in here, right? There's a whole idea is that we cooperate together, right? This whole brokerage is about collaboration. Any other nuggets you want to give about FHA?
Well, that's one of the programs that we do have. They also can help you. Now, of course, they are not grants. Okay, you have to pay
Yep.
them back.
Yep.
But they're silent. They're silent seconds. Can you hear me? It's just I feel like
Yeah,
okay,
they
good.
can.
And I talk loud. I'm Puerto Rican,
You're
so
good.
all right. So yes, so definitely, I mean, you do have to pay it back, but it's a silent second, right? And it helps. And by the way, I refer a lot of people to you, by the way, so you know.
So this is what I love is this spirit of cooperation. And this is, let me tell you, every time I've seen a squeeze in the real estate market, it's the people who cooperate. Really never forgets you. The people who make a ton of money, and people look at you and go, yeah, it's that guy with a big car. And then there's people who go, wow, they really helped. And that's a long-term career. So I really encourage you all to build long-term careers. Other input on, yes.
So quick question. Do you guys follow also a lot of the FHA guidelines outside of your own, outside of the?
Yes.
Okay, perfect. So, okay, perfect. So one big thing, right? You guys know a lot of people here in California, we have multiple families within one household, right? So the HUD did a really big change this year on border income. That's really important to know. So if we can document that you're receiving rents from other family members, you can use that rental income as supplemental income for your purchase. So if you guys are renting, you have your family member who maybe is working under the table or doing something else, but they're giving you $1,000 a month. If you're able to document that rental income you're getting, it can supplement up to, what is it, 30%? of your income.
So did you guys know that?
This is huge. So you want to ask people, hey, are you receiving money for rent from other family members? Awesome. Are you documenting it? If not, let's start putting it into the bank because that's going to help increase our.
My immediate question there, Joe,
Yeah.
is going to be, how long do you have to document that? This is
So
Dominic,
you-
by the way,
oh,
with
yeah.
ICONNCT. By the way,
Right.
Dominic makes about 100 outbound calls a day for this team. A day, right? As does Alfonso. Yeah. John right over here, I think makes more than that. Sorry, Dominic.
No,
But he makes even more than that and has a team, and they're making hundreds of calls outbound a day because we've got 18,000 active buyers in our pipeline that need to buy a home. So we're just completely buried in loans, in opportunity. And so that's what these guys are doing. So just kudos to them all. And I just asked a question.
You need a minimum of 9 out of the last 12 months, and they're going
Oh,
to
there
add
you go.
over 12 months, but it's important because a lot of you guys work with people before they're ever even ready to
Yep.
buy. So when we start doing that, that the big part is making sure we can document it, right? A lot of people get cash payments,
So that's just deposited into a checking
into a
account.
checking account, Zelle, anything like that. Yeah.
Uh,
We can- that we can-
copies, cancel checks, you'll go with that? This is Christian. Keep the microphone up because lots of people will listen.
What they should be doing is, just like when people document like someone else paying a car, stuff like that, the best way to have someone document any type of income is just doing it with like a check. So don't do cash, don't do any of those things, right? Literally just have them write you a check every single month. Doesn't have to be claimed on tax returns or anything.
Christian, brother, think of all the new home builders who've built next generation homes, right? Next gen. I mean, it didn't even, when I started, next gen, what the heck does that mean, right? The last 10 years, I would say next gen is huge. That's all extended families, isn't it, living together? So I honestly didn't know this until about 6 months ago. And that's unusual for me. Sorry to be a little bit arrogant, but you can actually have a live-in family member that's paying. The daughter comes back. I mean, often as a daughter marries some jerk husband and he leaves and she's got the kid, she has to move back into mom and dad. How many of you have heard that scenario 1,000 times, right? So just make sure the daughter's paying them and there's a cancelable check and you've got yourself a buyer for a next-gen home. That's absolutely fabulous strategy. Other things, guys, give us your wisdom here. Other ideas. How do we get Americans into homes?
Well, I mean, I think
And by the way, let's touch on that. What does American mean? How do we get humans into homes in America? How do we get humans? Because that whole thing, American, I'm happy that I'm a citizen. I don't want to touch on that whole political BS right now. How do we get humans? Can I just cut your wrist really quickly? I think it bleeds red. Look, let me see. Yeah, see, red, black. Oh, it's the same as mine. Really? Wow, that's weird. Let me just cut it again. Oh, it doesn't say who you voted for in the last election. Well, that's really weird. It's red, the same as mine. Right? So that's what we're talking about. How do we get humans into homes? Tell us. What do you need? How do we get humans? A human comes to you, they've got money. Let's take first of all the ones that are QM, right? Let's go the QM route. Right? Anybody online, come into the feed right now in chat and tell me what QM means. I want to see who we're dealing with. We need to know who knows what they're doing because we send you leads all the time. What does QM mean? Come in the channel, tell us what QM means. How do we get people in QM? What are the tricks?
Well, so one thing I think everybody that when you meet someone, they always say, I don't have the down payment, right?
Mm.
And it never fails that we ask the simple question of like, hey, something along those lines.
Basic
And
questions.
they all, but no one wants to ask that question, right? I understand that every realtor is scared of like prying too much into a client's financial situation, but if you don't know their financial situation, they can't buy a house. So like you have to really know if they have the opportunity, right? And I think stories sell. So everybody never wants to pull money out of a 401k because they're always afraid of it, right? But I always tell the story of like when I bought a house out here in 2014, came from Orange County, was going to buy a house out there or had owned houses out there, bought a house out here for $357,000, put 3.5% down on it. So it was about $12,000. 2021, I sold that house for $700,000. So in 6 years, I made $350,000.
So that's
How much money
generational
though?
wealth.
How much money did I?
15 grand, mate.
Yeah, I didn't make $350,000 off of a $350,000 purchase. I made $350,000 off of $12,000.
So let's just expand that subject, guys. You're all being very polite and very quiet here, but let's expand that subject. How do you stand out as a real estate agent over the previous real estate agent? It's cognizance of this type of discussion. Look, John, I know you're nervous about interest rates. And by the way, do you ever buy shares? Most people are on Robinhood and something, they buy some shares. So if you invest $500 in some shares and the market goes up, that share goes up 10%, how much have you made? How many of you ask people these questions? I know none of you do, and you need to. So now I want you to say it out loud. Let's say the person's name is John. Hey, John, if you invest $500 in a share and it goes up 10%, how much do you make? Ask that question. 1, 2, 3. Hey, John, if you buy $500 worth of shares and it goes up 10%, how much do you make? I guarantee nobody on this call has ever asked a buyer that. I used to ask all my buyers that because I knew where I was going. What's the answer to the question? Christian just did it brilliantly. It's $50, right? All right, so if I get a grant for $20,000 and buy a home for $500,000 and it goes up 10%, how much do I make?
50,000.
50,000. Because and it's a basic that you accept that the leverage of real estate is you're leveraging the purchase price, you're not leveraging the cash. So what Christian just spoke about was ROI, return on investment. And because of his investment is so minute, and in case of Vanessa's group and FHA with grants, your investment is so minute, your ROI is higher than anything Wall Street can ever provide. Even if Wall Street goes up 400%, you will not make as much money on that share as you will on real estate. Microphones, they can't hear. Online, they can't hear.
For the rate, whoa,
You're good.
for the rate sensitive people, this is my script, guys, and I tell this to everybody. What are you paying in rent right now? Well, they'll tell you 2,000, 3,000, whatever that might be. What's your interest rate on that? Oh, I don't know. Well, let me tell you, 100%.
100%.
So if I give you an 8, what's better? 8 or 100? So you see, now all of a sudden they say, oh, and not only that, the ROI on that 8%, you're going to earn, what was that again that we said? 10% or more?
Yeah, if a share is 10%, you make $50
There
on
you go.
500.
On that 8.
10% on a house, you make 50,000 on a grant.
And all of a sudden the rate thing just goes away. Believe me. That's my script. That's actually my
The
script.
whole point, I think here, John, you need to comment on this too, but the whole point is helping people see beyond the talk track of the media. And, look, I'm 68. I pray for the sake of my son, Jonathan, and Annette, my wife, who I love. Where is she? I just had to look at her again for just a minute right here. So I pray God gives me another 20 years. It would be wonderful. I would see. Yeah. I would see Jonathan's children, and that's a good price on that. But years of value. Many of you are very young here. Years of valuable. When people say, I'm going to wait 10 years, most human beings have 7 blocks of 10 years. 0 to 10, you're just basically getting away from suckling on your mother. And 10 to 20, you're finishing primary education, going to secondary, maybe 20 to 30 children, first house. You're just really just trying to work out how to breathe. Maybe you played a sport well or whatever. 30 to 40, it's like, I'm going to be 40 in 10 years. Years ago, it was like, oh, shoot, that's really old. Mirka's nodding here. I don't like her anymore because she was looking at me like, yeah, 40 is really old. It's really old. Then 40, you're like, oh, crap. 55 is retirement age, and I haven't gone anywhere near where I wanted to go. So when somebody says, I think the rates could be 4% again 5 years from now, for some people, that's 1/12 of their entire lifespan. So what you just shared really touched me, guys. How do we help people to see? It's not about 8% or 7 or 6. It's about this generational wealth you're going to grow. John.
100%. I would definitely say when you ask the question of what it is to take them to get into the home is, one, giving them the knowledge that right?
Amen. Did you hear that, guys?
Sure that you present yourself and teach them everything you know. Don't hide it back. Your experience speaks wealth, and they're going to have a game plan, right? Most people don't have a game plan coming when they talk to you. Set the game plan for them. Open them up.
Set the
Get them
game
to
plan.
talk.
Did you hear that? Keep going, John. Set the game plan.
Set the game plan, give them the knowledge, and then action. Making sure you stay on top of them, making sure they're engaged with you, and not letting them off the hook, because sometimes they need a little bit of a push. They need a little bit of push because sometimes they're hesitant. But once they have the knowledge and they feel comfortable with you, they feel good about the process, they'll move forward much easier.
So I like those words, Christian. And I know you do it so gently. I think I do it more clumsily than you. They need a little push.
Yeah, stories sell, right? And
Yes, it
so
does.
if you don't have a story, find it. And if you can't find it,
That's very good.
just take my story and just say, hey, I had a client who bought a house in 2014 for $357,000. They put 3.5% down. And in 2021, they sold it for $700,000. Like, use that story. Like, because you can say, oh, I think you should buy a house. I think it's a good time. But without a story to support it, you're no better than what's on the news or anything else. So figure out a story and use that story to demonstrate what you're trying to tell them. Stories sell. And if you don't have a story, you got to find one.
100%, I agree with that.
Guys and girls, we have to create forward for people. And you guys control the money. We are out there with buyers and sellers, but they control the money. So you essentially control people's destiny. And we have to, you're so right what you're saying. We have to give people a vision for the long term. America's looking at a crazy guy who pulls up to a church and opens fire. We need to help people see 350 million people and 260 years of history. People see somebody showing up in their neighborhood, masking their face in America, masking their face. This too shall pass. This is not why I came here. This too shall pass. It is our job to provide people vision. There are wealthy people in this room, but you're here because you're humble. We must, as loan officers, as agents, give people vision for forward. Trust me, after a guy who's lived through Reagan, Clinton, Bush 1, Bush 2, tanks in the Middle East once and twice, Obama, Biden, and now Trump, this too shall pass. But that soil is still going to be here. And your job is to give somebody home on that soil.
Along those lines, Andrew, today the government shut down federally. What the hell does that mean to us in real estate and lending? There's going to be a little bit of bumps for flood insurance. So those that live or have properties in flood insurance, you might need a plan B with a private insurance company like Lloyd's of London, because right now we're not going to be able to fund on flood insurance. Not everything is in flood, so that's minute. So that's just something to keep out for, oh, we have the Mr. Insurance guy, Eddie.
Eddie,
Hey,
I want to say this. Please don't all pick up the phone and ask Eddie to do a $100 quote that you're not going to send to him. Okay? But any loan that comes through our company, the insurance needs to go through Eddie because he supports so much of what we do. But Eddie, you will bring this solution for people, correct?
And then also the employers. So those clients of yours that are working for the government, federal jobs, just double check that they're still employed, because there may be layoffs or furloughs coming on because of what's happening with the shutdown. So those are just two pain points that may apply to some of your clients, not all. So if anybody's in contract or in escrow right now, just double check, do your due diligence. You guys should be like, I think, just double check. Because the last time it happened in the previous administration, it was 35 days that we closed, right? We don't want to be there. It may not be 35 days. It may be shorter, but just do your due diligence. Be that amazing, kick-ass realtor who's going to double check your clients and just look out for their best interests. us lenders, we have a backup plan, all of us here on the board here on the panel. But those are just things to look for, like 4506 transcripts that we're going to double check. So just do your due diligence as we're talking about things that are coming in the market like today.
So let me ask you guys a question. This is going to hit home. Are you more secure for your family and children if you're renting a home and lose your job, or if you own a home and lose your job?
Sure.
Everybody in the room, listen. Everybody online, listen. I'm going to ask the question again. Are you more secure with your wife, husband, children, if you lose your job and you're renting a home, or if you lose your job and you own a home? I'm going to ask you again, which are you more secure?
Own a home.
Right. So I don't know if any of you are foreclosure experts. Let's not go too deep a dive. But let's say today I lost my job. How long is it going to be before I get a letter from the lender saying, we got a problem, let's talk? How long is it going to be on average? 60 to 90 days. Does anybody know what that first letter is? It's a notice of intent to foreclose. Is it a notice of default?
No.
Is it a recorded document? Is it posted publicly? Is it at the courthouse? Are they going to lose their home at that point? No, it's a notice that they're thinking about it. Now they're going to have to deal with Sacramento. That takes a while right there, let me tell you, right? I don't mean driving there, it just takes a while. So they're going to get a letter. What happens after that letter? What do they ask them for? They ask for the balance of money, but what do they ask the homeowner, the mortgagor? What do they ask them for? Does anybody know specifically what do they ask them for? They ask, are you working? So on, what do they ask for? They ask for a financial statement. When that financial statement goes in, how long will they wait for that financial statement? Does anybody know?
60 to 90 days.
60 to 90 days. So we're in at 180 days. And you send that in. What has the federal government ruled after the Dodd-Frank issues in Congress, the congressional hearings? What now has to happen? What must the bank do? Does anybody know? They must try and work it out and create a solution. A payment, huh?
There's a special.
Right? How long does that take? At least another 60 to 90 days. Excuse me, guys, we're up to nearly a year, right? Now let's say they can't qualify. Now what can the bank do? And often it's the servicer, and often they don't know. The right hand doesn't know what the left hand's doing. Now what are they going to do? By the way, by now you've gone out to Hemet or Riverside to the counseling agency. You've got a HUD counselor on the phone with them to talk with them if they start to intimidate you, right? So that's your next step, right? And I can go on all day long. Foreclosure happens to be my specialty. You can't guarantee somebody this, but it's extremely unusual in California now that somebody will be kicked out of their home in less than 2 years. Exactly. Now let's back it up because I'm taking too much of your time and I'm sorry. Now let's back it up. Let me ask you this question. If you're a renter, other than perhaps in some of the rent protected areas in Los Angeles, and you stop paying your rent today, how long before they're going to have you out? 60 days. So it's about 10 times more dangerous renting than buying. So in times of instability, this is your message to folks. I've got blogs on GoWP now that talk about this. Just share them in the blog, okay? So it's instability. I want to move over quickly to generational wealth. Generational wealth is the idea, like Christian, who now is, well, I say it because I'm proud of him, wealthy. But he started buying this house and moved from there. So that's his position. So he's built generational wealth. How do you convey generational wealth? And guys, what are the ways people can build generational wealth through your services as lenders? Help us out.
Real estate investment.
Right? And tell me how, because most people think, I can't be an investor, I don't have enough money. How do you help them?
So you leverage your equity in your home. Well, it's called, if you're already a homeowner, you gained equity. There's programs like DSCR, debt service coverage ratio. If you guys
touch on that, what that means.
So debt service coverage ratio is not based on anything besides the potential rent of the investment property. So say if you buy a duplex and you get it rented out for $6,000, you would use that $6,000 to qualify against the monthly payment of the mortgage. Then use the PITI, principal, interest, taxes, and insurance. So then you use that to leverage. They don't have to worry. You can literally even buy it with an LLC. I don't know if you guys known before. You can't really purchase on conventional Fannie Mae, Freddie Mac with an LLC, but you can with a DSCR. And you can always build and keep on buying.
How much
as long
down
as
for
you return.
DSCR?
So DSCR, usually on average, on most investors, they start at 25. There are some investors that's willing going down to 20, but then you have to have a good relationship with them, which we do. So.
Right, how's another way that you can convey to people all over Los Angeles, Riverside, and San Bernardino County, San Diego County, that they can become investors within 2 to 3 years? How long do you have to own or occupy an FHA loaned home? 12 months? I'm not talking about commissions right now. I'm talking realtor boys.
No EPOs.
I'm asking you from the government's point of view, how long do you have to be in that home? You know?
6 months to a year.
6 months to a year. Now, what about
Wife had to move out and rent. She had to explain it. I mean, that happened.
so 6 months to a year? Let's just say that generally. What if it's a Fannie Freddie conventional product? Same thing. So now watch this. So you use an FHA program. This is an old investment strategy that I used to teach in 1990. Most of you weren't even born then. So you hold a buyer seminar and you say, become an investor in 12 to 24 months by paying half a house payment. Run a flyer like that in social media and see if anybody comes. Become an investor in 12 to 24 months. All you have to do is make half your house payment. How about that? Anybody interested? Anybody in this room interested in that? All right. So you're going to go out, you're going to buy a duplex, FHA. The rent on the second half you're going to use for debt service. You're going to qualify for the other half based on FHA underwriting criteria. And after 12 months, you can rent out your half, pay the debt service, and go buy a house somewhere else. How far are you ahead of that renter who said, I don't want to live on that street? Now you're way ahead of it, and you've started. You got me? Now, in any sort of increasing market, even if we have a little dip right now, trust me, that's the time to buy. This is the time. You want me to hold buyer seminars here, anybody, by the way? How about holding a buyer seminar up in Orange County that says you can become an investor in 12 months by making half your house payment? Do you think anybody would come to that seminar? All right. Well, I don't have time to go take them all out. Anybody want to show property to the people who come? Anybody want to show property to the people who
Wow.
come in, buy a duplex, qualify for half? Am I getting this right?
100%. And then there's our ratios that go all the way down to 0. So say if your rent is actually lower than what the mortgage payment is, you actually have programs for that because we have multiple investors that do them. So if you have, because obviously some people, with the rent right now is a little bit not on the preferable side when you're purchasing. So sometimes the ratios will build over time because obviously you're going to be raising rent and stuff like that every year. So that's what you bank on as well.
So we've got multiple strategies for investors, but I think we said 45 minutes. We've invested 45 minutes. Do we have any questions from the room, or does anybody here, like Andy, you completely missed this?
Hold on, there's just one more thing. So a lot of the nonprofits that you work with have landlord classes. So for those mom and pops that are like, I don't know what I'm doing, guess what? Connect with a nonprofit. They have landlord classes for the units. So they're educated on how to do contracts, how to do rental agreements. So you can help navigate that as the expert with your clients.
Go ahead, Angelica.
So Dominic, were you on the program that you count the rent, the private rent as income? Is that 12 months of bank statements showing proof of payment?
So you can show proof of payment tons of different ways, right? Like they were mentioning cancel checks, bank statements. You can show even like Zelle transaction.
How many payments do you need?
So you need a minimum of 9 in the last 12 months, but you're really aiming for the 12 months because they're going to average it over the whole year. And this is for FHA loans. So that's why I was asking them, do they follow FHA guidelines? It's a HUD rule. So if so a lot of lending companies, they'll have their own overlays, but then they follow a base set of guidelines. So as we're talking for FHA loans to use that border income, it's a guideline.
Can it be done with half a conventional?
Should be, yeah, because they follow FHA guidelines. Yeah.
Yeah, Kathy's got a question. If you have 9
Exactly.
It's just opportunity. Aja, go ahead, hon.
So do you guys offer for investors maybe either cash out refis or HELOC so they can purchase other properties?
There are a lot of people with a lot of equity right now, and you need to move their minds. So when you meet these buyers, these are the conversations that distinguish you from other realtors. When you meet these buyers, you say, hey, have you thought of becoming a real estate investor? You know, our company works with people and help them become real estate investors. Have you thought about building wealth in real estate? And you start a completely different conversation. Now it's not just, oh yeah, my uncle Bob is a realtor and he's going to write up the deal for me. Suddenly you become a consultant to them. That's how I broke in 1990. I started this conversation month one with my real estate license. And it's this kind of cognizance and awareness and these kinds of partnerships that give you the power to have those conversations. You need to set yourselves apart. And by the way, as we dip right now, this is the time for people to start seriously looking at an investment property. Yes. They need to look now. They're going to make, I personally think we're going to see a 25% price adjustment. Now, that's controversial. Some people don't think so. Realtors never say so because we lie, because we're afraid people don't want to hear the truth. But actually, people do want to hear the truth, right? Mm-hmm. And just because there's going to be, if there is a 25-point dip, nobody ever buys it at that perfect moment. All you know over a 20-year period is you made a boo-boo if you didn't buy it. Did you hear what I said? All that's guaranteed is if you don't buy it over a 20-year period, you made a big boo-boo. And if you're still renting, you have basically financially crippled your family. If you're at 30 and you haven't bought a house by the time you're 50, and if you're at 30 and you haven't bought a house by the time that you're 40, the first, and I don't know this exactly, you can correct me, but the first 10 years on the amortization chart, a very small amount of money goes to paying off your principal. After 10 years, which is why banks push, sorry to knock your bank, but that's why banks push so aggressively for refis after 10 years. They want to reset that loan so they can keep more of the payment. You understand? Right. So the whole idea is those 10 years, people are crippling their families by not getting into a home between 30 and 40. Because 40 to 50, suddenly you're paying off this principal, you're building equity. Now you turn around, take that equity, leverage yourself, call one of these fine gentlemen, set up a DSCR loan, you buy a second property, even it's in another state, you put that property on a 20-year payoff or a 15-year payoff, you're paying an extra $400 or $500 a month, which people pay for their car in California. 15 years later, they've got $2,000 a month coming in on that property and they're doing nothing for it. Mm-hmm. So I can show you completely asleep how to create generational wealth. So I specialize in sleep-induced generational wealth seminars. Right? All right. Let's give these guys a round of applause. Thank you very much.